Good morning, everybody. Hope everyone's doing well out there. Hope everyone had a great weekend. I know these last 3 days have been absolutely terrifying, especially if you've never been through a market correction or a sell-off like this. Or maybe you're like myself and you're just margin to the tits and you have a lot of debt hanging over your head. So, the weekend was definitely, one of those weekends where you're just praying that things don't get any worse. But it is what it is. That is the risk we take in order to make these gains. So that's just investing in general, right? There was a lot of fear and doom and gloom over the weekend, a lot of press conferences, not so much for, the president because he was out golfing, but beside the point. But, you still had got Scott Bessent out and about. You still had Howard Lutnick doing a couple of interviews. You had, just a slew of news coming out left and right about the tariffs and about how countries are reacting. And we're going to get into all of that. We're going to be talking about a little bit about stock market news, sailors in the news once again. And this definitely is not going to be good for msty holders or anyone who's investing into MSTR. This is kind of a high risk. This is kind of a high risk in my opinion. And something I did touch on before and was basically lambasted for it, but we'll talk about that in a few minutes or in a few moments. So again, got a lot to cover in this stream. Let's pretty much just get right into it. All right, guys, let's just get right into it. All right. So hope you guys were able to buy the dip. Let's just hear a little song to start the day off. Cause I know the last 3 days have been absolutely brutal. Today was no different. So let's, just have a quick brief reprieve from everything.
Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it. Oh my God, what's happening?
First of all of this whining by Wall Street.
All right, enough of that. Okay, all right, let's get into it, guys. We're gonna take a quick look at the portfolio. So this is the portfolio. Nothing really changed too much. I did sell out of the Ethereum covered call ETF, which dropped my annual income by quite a bit. But again, like I said in previous streams, this number will always fluctuate because, as dividends get paid out, as, these weekly pays, their dividend distribution rates, they tend to fluctuate. So they're not steady. So it is what it is. But, this is subject to always change. April income is expected to be $3,100. I don't think this will be true. Honestly, I think it'll probably be slightly more, maybe between 35 and 4,000. We'll see how it all goes. All right. Looking at my actual portfolio, looking at all the numbers, I am down about $67,000, if I'm not mistaken, about $67,000. All right. It was $70,000 Monday morning. All right. But, again, we had kind of a spike in the market based on a rumor that turned out to be false, right? That rumor was basically, Donald Trump is going to put a 90-day pause on the tariffs, and the markets went ballistic. They went crazy. I think I saw like a post out there that it was like $2.6 trillion was added to the market in a matter of a few minutes. And then, it turned out that rumor was false. And the news broke, and then White House responded saying that's not true at all. And then, basically we came crashing back down to planet Earth. All right. So I was actually expecting Monday to be a much bloodier day. And I think that rumor really came about from Bill Ackman, who, he's a pretty prominent investor. He's a hedge fund manager. And he basically put out a post on X, basically criticizing the president and saying that, he really wants a 90-day pause, probably because he's getting margin called left and right. And I wish I brought up the articles now that I'm thinking about it, but there was a ton of articles talking about how all these institutions, all these hedge funds, all these, major players out there, market movers, they're getting margin called like crazy. So, I guess if you're an investor with a lot of margin, you're not the only one getting screwed. So, hey, it is what it is. But Bill Ackman is I think he's like a billionaire of some sort. Yeah, he's a billionaire. And he was a big, I guess, backer of Donald Trump during his campaign. So you know, when he's coming out and saying, you know, he wants 90-day pauses, but he's not the only one. There was several other, and I'm going off script here. I'm going completely off topic, but there were several other, you know, prominent, you know, investors, billionaires out there. The CEO of Home Depot, his name eludes me right now, but the CEO of Home Depot, who was a major backer of Trump during his campaign, you know, he's also saying that tariffs are stupid. He doesn't understand them. This is, you know, this is playing with the economy and the lives of people, right? And several people are coming out of the woodwork, you know, again, all from, you know, Trump's side, basically his backers, campaign donors, and even the Republican Party. They're all coming out and saying, you know, hey, like, Trump, you need to calm the hell down. We need to bring these tariffs back. Senator Ted Cruz, you know, also spoke up and didn't like it. And then, you know, Trump was out golfing pretty much all weekend, enjoying his time. You know, so not to make this channel political or this video political, but, you know, it is what it is. Politics intersects with finance, unfortunately. So we have to just, you know, again, look at it objectively, look at the facts, look at what happened, and just move on from there. But yes, this weekend was pretty shitty. And then today, again, we got some type of reprieve from all of that, because there's, you know, talks of basically countries coming to negotiate, which I'll get into in just a moment. But yes, I say all that to say that I am down $66,000 or $67,000. This was at $70,000. This really does test your resolve, especially if you have a lot of margin on your account. So it is what it is. Just want to take a quick look at the chat. So I see we have Certified. Welcome back. Crazy as always. Yeah, I don't have a theme song, so maybe one day in the future I will. Galveston County Mike, hey, appreciate you joining. All right. Yeah, absolutely hit that like button, guys. I really do appreciate it. It does mean a lot to me. It does help this channel grow. All right. Senpai, strategies over spreadsheets every day of the week. All right. We don't need spreadsheets. All right. We don't need spreadsheets out here. You guys wouldn't even be able to see it. All right, especially if you're watching from your phone. Ray Gunn, I do not have a Discord channel, although that is something that is in the top of my mind. I just haven't decided how I want to go about it, but I do appreciate the question. All right, so moving on, guys, let's talk about it. The Dow and the S&P ended lower while the NASDAQ edged up higher after a day of whipsawing. And this whipsawing was really apparent, right? Again, first we started off with that rumor. It shot up really high. Life was good. We're all euphoric. We're like, you know what? I wish I bought more, right? I wish I bought more. And then it started crashing down. And then you're like, oh shit, right? And then, you know, you're trying to like figure things out. And, you know, come to find out it was because of a rumor. U.S. stocks dropped again during Monday's trading session as ongoing tariff concerns continue to fuel uncertainty and rattle the broader market averages. In the early morning, all three major averages were lower by more than 4%. All right, 4%. We were negative 4%. That would have been a killer for some people's portfolios. All right, in the early morning, all three major averages were lower by more than 4%. Then a knee-jerk, all three indexes rocketed higher up to the green after an unconfirmed report of a 90-day pause, right? That was basically the rumor. And then the White House responded and say that's not true at all. Tariffs are going to move forward, you know, but the big players in this tariff war right now, like all eyes are going to be on China, right? In my opinion, all eyes are on China and going to see how they're going to react. They're one of our biggest trade partners, right? Mexico, Canada, you know, Canada, they just had a couple press conferences, I think over the weekend and today, that I didn't find information on, but basically they're, you know, coming up with they don't want to call it a retaliatory plan, but basically a plan to make sure that, you know, their interests are looked after. Same thing for the United Kingdom, the same thing for the EU. Everyone's looking out for number one, right? Some countries are getting tariffed to hell. China blatantly just said that, hey, we're gonna be tariffing you guys. And now Donald Trump came out with a tweet not too long ago, basically saying, all right, well, if you're gonna tariff us, we're gonna tariff you. And then, you know, their tariff is gonna be ridiculous. But, you know, hopefully things calm down again. Japan, South Korea, biggest electronics providers. Same thing with China, biggest electronics providers, for products. And I'm eager to see what they're going to say. Like, I'm keeping an eye on what they're saying because I think they're going to play a big part in this whole tariff stuff. Same thing for Mexico and Canada. I know there was a conversation had between Mexico and the United States. Don't know what came of it. Didn't see anything relevant, or anything newer than what I found, I think Thursday or Friday. So hopefully we get better days ahead of us, right? But yes, S&P 500, the market basically whipsawed up and down. It kept going up and down for the rest of the day, but the NASDAQ ended in the green by a few basis points. So I laugh at this because we've covered this on our channel before. All right. You guys have been here for a minute. You guys have definitely you've heard me talk about this. All right. Strategy, formerly MicroStrategy, right? Whenever they're in the news, I got to cover them. Strategy sees Q1 net loss after $5.91 billion in unrealized loss on digital assets. All right. So that depends on where Bitcoin price is, right? If Bitcoin continues to go up, that's good. Strategy won't have to deal with it. But if it continues going down, it could spell disaster for Strategy, for msty holders, for MSTR investors, for really anyone that touches Bitcoin as well, because this could probably have some cascading effects. Strategy recognized a $5.91 billion unrealized loss on its digital assets for Q1 2025, which is expected to result in a net loss for the quarter. The company said on Monday the stock of the company, which has amassed holdings of Bitcoin on its balance sheet, sank 8.5% in pre-market trading. All right, with Bitcoin dropping 7%. Here it is right here. We may not be able to regain profitability in future periods, particularly if we incur significant unrealized losses. That means if the price of Bitcoin goes down related to our digital assets. The company said in a filing, as a result, our results of operations and financial condition may be materially adversely affected. All right. This is just a fancier way of saying that if Bitcoin goes down, Strategy is screwed. All right. Anyone who's investing in anything MSTR related is screwed. Okay. And if this could have cascading effects, because if they need to sell any of their Bitcoin, this could have an adverse effect on Bitcoin itself. All right. Just my opinion. I could be completely wrong. I'm not a crypto guy. You guys tell me if I'm right or wrong, or if it makes sense. Right. Let's see. We covered this part as well. So Strategy, which previously did business as MicroStrategy, also said it had tax liabilities for an unrealized gain on its Bitcoin holdings of $2.28 billion. Its deferred tax liabilities are partially offset by deferred tax assets, such as net operating loss, capitalized research and development. If the market value of Bitcoin continues to fall in future periods, its deferred tax liability related to unrealized gain on Bitcoin holdings will decrease, and we may be required to establish additional valuation allowances against our deferred tax assets with respect to our net operating losses, capitalization, research, development costs, blah, 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 right? Word salad. Basically, what they're trying to say is if the price of Bitcoin goes down, their company makes no money, so they're going to have to sell. That's really it. They're going to have to sell. Strategy, the software company, does not make any money. I've showed you guys the earnings before. All you have to do is go into Google and put in MSTR earnings. Their company does not make any money whatsoever, right? Their whole business is tied around becoming a Bitcoin treasury or being a Bitcoin treasury. So their whole business is tied to Bitcoin. If Bitcoin drops below a certain threshold, this company is going to really, really feel it. And, referring back to the whole tax that they would have to pay on unrealized gains, talked about this earlier in the year. And there was an article published by the Wall Street Journal basically saying that MSTR is going to have to pay that tax. Well, their company makes no money. So how the hell are they going to pay the tax? In order to pay that tax, they would have to sell the Bitcoin, right? And that could have a cascading effect. They would have to sell, I don't know, maybe a couple $1 billion to cover that. And of Bitcoin. And then not only that, again, their company makes no money. So this would have a horrible, horrible effect. MSTR Strategy and Coinbase sent a letter to the IRS or the Secretary of the Treasury, it depends which article you read, basically asking for a exemption. I have not seen anything whether that exemption has been passed or not. I know, the current administration is very favorable towards Bitcoin and crypto. So we'll see what's going to happen. I was kind of expecting that would have already been solved in the first quarter of 2025 because it happened so early, and, we had this whole crypto summit at the White House and all this other stuff, but it doesn't seem like anything was done with that, exemption letter. So more to be. I guess we're waiting on more news for MSTR. So anyways, they even say right here, our enterprise analytics software business has not generated positive cash flow from operations in recent periods and may not generate sufficient cash flow from operations to satisfy these financial obligations in future periods. All right, so is what it is. MSTR holds 528,000 Bitcoins, which is roughly half of what Satoshi Nakamoto, either the group or the individual, the creator of Bitcoin, actually owns on their wallet. So for MSTR to hold this much and to be this concentrated, if they were to fail, the cascading effects will be very, very great. All right, it will be felt across the crypto, at least Bitcoin universe, in my opinion. Okay, this is all based on my opinion. I see some chat. Let me just check it real quick. What's up, Sauce? Hey, appreciate you joining the stream. Citizen of the Year. Yes, I heard our beloved high yield dividend warrior is back. Again, I have no comment. I wish him well. Citizen of the Year also says it's a Ponzi scheme. So yeah, I would honestly agree. Yeah, MSTR at this point it looks like a Ponzi scheme. You have GameStop that's trying to offer their own debt, their own convertible notes at 0% interest rate for GameStop shares convertible to GameStop shares, which I don't know. I don't think anyone has actually bought that stuff. I haven't seen any news about GameStop, about them being successful with that raise. I do know that they did purchase some Bitcoin, but I don't remember how much. But again, you have GameStop, which is, the most infamous of meme stocks out there. They're sitting on $4 billion in cash and they want to, put it to work. So Ryan Cohen, basically met with Michael Saylor and said, hey, how do I make this work for GameStop? So now GameStop is becoming a Bitcoin treasury, similar to, I think it's Maro Holdings or something like that. So Maro Holdings. So yeah. Mike says, I dumped the MSTR last year, made good money. I'm not buying MSTR again. I don't blame you. Citizen Year says government wants their money, can't keep crypto exempt. Yeah, I 100% agree. I know Berkshire Hathaway also owns some crypto. I don't know how true that is. I just kept seeing that in the articles. So their MSTR and Coinbase are trying to get that same exemption that Berkshire Hathaway has. But I don't know what came of it. I haven't seen any news on that exemption being approved or not. So we'll wait to see. I mean, the administration has been very focused on this whole tariff stuff. So I think this crypto stuff is kind of taking a backseat until probably later quarters, because they don't have to worry about the whole tax bill until I think the end of the start of the new year. So we'll see. We'll see what comes of this. Again, anything that strategy, any news about strategy that comes out, I'm going to cover it, just because, it is going to be a fascinating case study. If Bitcoin does face a winter and does go down in value, this is going to really hurt strategy, and this is going to really hurt any MSTR investors, any Strike investors, any Strife investors, any BMax holders, any msty holders. So again, I like to cover this whenever it does come up. So all right, moving on. All right, so we have kind of skipped it there. Okay, so Trump says he won't pause U.S. tariffs, but is willing to negotiate trade deals. So this kept bouncing back and forth all weekend. Trump was saying that, he's hardline stance on tariffs. He's not changing his mind. No, excuse me, I got that backwards. So his cabinet, his lieutenants and all those other people were basically saying that no, Trump is not going to negotiate. There's no room for negotiation. And then over the weekend, you start hearing these words like, oh no, he's open to negotiation. Trump, I think, made a post on Truth Social saying that, yes, basically we're open to negotiations, right? So U.S. President Donald Trump on Monday said his administration won't pump the brakes on imposing tariffs on products coming to the U.S., but he's open to discussing new trade deals with other countries. So really, I think this is the end game, right? This is what the whole reason for the tariffs were to begin with, was to force countries to come to the table to negotiate new trade deals. So whether this is going to happen or play out the way, he wants is left to be seen. You do have, people in the House and Senate basically trying to derail this plan and stop the tariffs, but I don't know if that will come to pass. I am trying to keep an ear open and an eye on the articles that do come out regarding this, but there's just so much news about this stuff. It's hard to keep it's hard to keep up with everything, to be honest. You know, as market participants, you know, it would definitely, and I hate to use this word because if you're in the military, you know this word, it would behoove us to ignore what's happening right now with the political landscape, especially with, you know, this whole tariff game and, you know, politics in general, because this has a big play on what is happening in the markets. We're not looking at that, Trump said at the White House, responding to a question about whether he was considering pausing tariff plans to allow for negotiations. We have many, many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. I'm surprised he didn't say we're going to be making billions of dollars, but beside the point. So there is room for negotiation. And, you know, like I mentioned at the beginning of the stream, I'm trying to keep an eye on Japan, South Korea, China, and Canada, Mexico to see what they're going to do, right? The EU, UK, obviously, they're very important as well. You know, it's such a changing landscape. The EU came out and said, you know what, we're going to take a cool-headed approach. We're going to, you know, work with the Trump administration. And then they came out later, or I saw an article later saying, oh, you know what, we're going to come out with our own retaliatory tariff plan, right? But they're not going to enact it until about May timeframe, mid-May. So I really think that they're giving a lot of time for negotiations to take place. So this is good news, guys. This really is good news. Like, despite what you might hear or think, I think, you know, this is good news. This is what we definitely want. We don't want to just start tariffing the hell out of everybody, because this could lead into a worse market than we're already in. So at least this is some type of good news. And again, I'm going to try and keep an eye on all the news that's coming out with the tariff situation, because again, this is impacting the stock market. You're already starting to see articles and news pundits, financial analysts, everybody and their mother is talking about a recession now, right? Recession. Even Jerome Powell, I just listened to his speech on Friday, where he was just having a, you know, I forget what the actual conference was, but he was basically saying that tariffs are no longer transitory. If these tariffs are here to stay, then we will be dealing with higher levels of inflation. And, you know, JP Morgan Chase, Goldman Sachs, all these other, you know, big, large banks, institutions, that sort of thing, they're all predicting and pricing in a recession for later this year. So again, this is a very pivotal point right now for investors, for the markets. You know, this is just, it's going to be spicy. It's going to be really, really spicy. All right. So found this article. Now almost 70 countries have asked to negotiate with Trump on tariff. And this is coming from Scott Bessent. Scott Bessent is the Secretary of Treasury. All right. It's going to be a busy April, May, and into June. All right. So this is important because these months are probably going to be very volatile. I definitely know, or I definitely feel like April is going to be the worst of the bunch until the more clarity comes out. Again, the stock market, very emotional, driven by human emotions. You know, investors do not like uncertainty. Capitalism does not like uncertainty, right? So once things start to cement a little more, you know, some deals are made, some negotiations are made, positive news is put out there, I really think that we'll see the stock market continue to drive up. All right, so I'm really, really hopeful for that. Nearly 70 countries have reached out to President Donald Trump after he unveiled his Liberation Day tariffs last week. Treasury Secretary Scott Bessent said on Monday. That estimate comes after Bessent and other Trump administration officials stated over the weekend that more than 50 nations had contacted the United States to initiate negotiations on trade. I can tell you that there are 50 to 60, maybe almost 70 countries now who have approached us, Bessent said during an interview. So let's just watch that interview real quick. It's only like a couple seconds.
Larry, I can tell you that there are 50, 60, maybe almost 70 countries now who have approached us. So it's going to be a busy April, May, maybe into June. And Japan is a very important military ally. They're a very important economic ally. And the U.S. has a lot of history with them. So I would expect that Japan's going to get priority, just because they came forward very quickly, but it's going to be very busy. And if President Trump, again, gave himself maximum negotiating leverage, and just when he achieved the maximum leverage, he's willing to start talking.
So there you have it, directly from the Secretary of Treasury's mouth, all right? Moving on, Trump threatens more tariffs on China as global markets shudder over how much pain the economy can take. This news is going to be the big one because I haven't seen an update from China, but basically, Trump said we're going to be slapping you with a 34% tariff, and then China came back and said, okay, well, we're going to hit you with a reciprocal tariff, of 34%, and then Trump basically shot that back and said, if you don't lower that tariff, we're going to hit you with even more. We're going to double the tariff. So they'd be at like 104% with all tariffs said and done, which is crazy. All right, let me see if I can zoom this in a bit for you guys. And of course, all these links will be down below in the description at the conclusion of the stream for you guys. Undeterred by a panic stock market, President Donald Trump threatened additional tariffs on China Monday, raising fresh concerns that his drive to rebalance the global economy could intensify a financially destructive trade war. All right, if China does not withdraw its 34% increase above the already long-term trading abuses by tomorrow, April 8th, the United States will impose additional tariffs on China of 50% effective April 9th. All right, and he wrote this on Truth Social. Additionally, all talks with China concerning their requested meetings will be terminated. Again, these are the negotiations. I take that as good, that China is willing to come to the table and negotiate, right? I think it was kind of foolhardy for them to say anything about slapping tariffs on us, but maybe it's because, they're just trying to show strength. But I don't think, honestly, the president is going to move or budge on this stuff. So judging how everything's been going this last week, and basically since the beginning of his administration, as far as implementing tariffs and putting tariffs on countries, I don't think he's gonna budge. Right? I really think this could get worse if they don't negotiate. So saying that, hey, we're gonna slap you with a tariff as well, that only escalated the situation. So hopefully, we come to some type of good agreement. Again, China is a big trading partner. There is some geopolitical strife with them, especially when it comes to Taiwan. So when Scott Besson's talking about maximum leverage, this is what he's talking about. He's talking about Trump having, or the United States having, some type of leverage or levers to pull, to prevent something or to get something, right? The whole TikTok deal is still on the table, which, the United States is trying to acquire. The U.S. president has shown few signs of backing down on tariffs despite mounting pressure in the financial markets. His commitment to tariffs could have devastating effects for the global economy, yada, yada, yada. All right. So, again, got to keep an eye on this. China, Japan, South Korea, Mexico, Canada, these are the bigger trade partners. EU, absolutely a bigger trade partner. But, again, I think they're already working on a negotiation of some sort. All right. So I'm not really too worried about following what they're going to do. They rely on the United States for a lot, and not just trade. They rely on the United States for defense, the whole NATO pact and everything else. So you got to take that into account as well. All right. So this is a big juicy piece. All right. We started the year with only 2 Fed rate cuts. Now we're talking about 5. All right. Now we're talking about 5. Now, it hasn't really materialized yet. And again, this is coming from the CMO or the CME Fed group. Basically, they just place bets, right? They're just talking about how many times could we expect a Fed rate cut this year, right? So this came out. I thought it was kind of interesting, with all this talk of recessions and stuff, and inflation. People think we're going to really get 5 rate cuts this year. I don't think so. To be perfectly honest, I don't think so. Donald Trump went on Truth Social and he said, hey, Fed needs to lower rates immediately. Food, energy prices are all down. Inflation is tamed. We won the war. Lower interest rates now. And there is a prevailing thought that all of this, and over the weekend, if you kept up with the news, there was Donald Trump posted this video on Truth Social basically explaining that everything he's doing is to force the Fed to lower interest rates. So then the United States can basically refinance their debt, right, at a cheaper cost. So because the interest rate the interest on that debt that we're paying is, we're not able to meet it, or we're barely just able to meet that. So obviously that's not sustainable. That's like you not being able to pay a credit card off, or barely able to pay a credit card off. So I don't know if it's a conspiracy theory or not, but it is an interesting angle to work, because it does almost look like that is the case, right? That is what is what is actually happening. He keeps pressuring the Fed to lower interest rates, right? He keeps tit for tatting. Scott Bessent, Donald Trump, they're focusing on bringing the 10-year down. The 10-year spiked for some odd reason. It was trending downward, but now it spiked. So who the hell actually knows? But it is interesting. The markets and President Trump are piling more pressure on the Federal Reserve to consider a near-term interest rate cut as the tariff market sell-off deepens. Traders boosted their bets on the number of Fed cuts this year to 5 and pulled forward their estimate of when those cuts could begin, starting at the next meeting on May 6th to 7th. The odds of the May cut are now above 50%. I don't think there's going to really be a Fed cut. I just don't see it. And the reason is when the Fed cuts, there's actually emergencies. There's actually things going on. You had the GFC, the Great Financial Crisis, 2008, 2009. That happened, right? Fed had to cut interest rates. The Rona, right? The Rona of 2019 or 2020, when that happened, Fed cut rates, had to do that, right? But right now, we're not in a recession. The numbers, I don't know. Everyone says something different. So far, the numbers are not trending that way. Scott Bessent is saying that, no, the numbers don't look like we're headed for a recession. Howard Lutnick also said something similar. But then you have, JP Morgan Chase, Goldman Sachs, all these Wall Street bigwigs out there, all talking about that we could be in a recession right now, or we're heading for a recession. So I don't know what you make of all of this, or how to think about all of this. But from a standpoint of just a nobody on YouTube, just watching financial news, Jerome Powell, I don't think is gonna cut the interest rate 5 times this year. I just don't see it. Left to be seen, right? Because he said tariffs would create transitory inflation, and now all of a sudden it's no tariffs. Long-term tariffs are going to create inflation. So if that is the case, then I predict that we could probably see more rate cuts. But right now in the near term, I don't see that happening. Powell is showing no signs of blinking. He made it clear during his remarks on Friday at an event in Arlington that the Fed isn't in a hurry to take any action on rates, saying it is too soon to say what will be the appropriate path for monetary policy. He also talked about the possibility of higher inflation and a slowing U.S. economy due to Trump's tariffs, which would be the steepest duties imposed by the U.S. in more than 100 years. So again, we're taking this wait and see approach to see if we will hit economic slowdown, if we will hit higher inflation. But if these negotiations happen between the countries for trade agreements, new trade agreements, maybe we can bypass a recession altogether, right? Maybe there doesn't need to be a recession. So we will see. All right. So just covering this real quick. This is the CME group Fed watch tool. It's just used as kind of a predictor of what, the Fed might do at their next meeting. So you guys can see right here, 7 May 25, there's a 69% chance that we'll maintain rate, 31% chance that we'll drop a rate, right? I believe we're currently at 4.25, 4.5, if I'm not mistaken. So the 69% chance that it'll maintain, 31% chance that we will cut, right? And this will probably change as we continue to get closer to this time, right? To 7 May. And then you guys can kind of check out, see how things continue to change throughout the year. You can even see it as far as October and December, right? There's people predicting we get down to, 2 3/4, which I don't know if that's even true. I don't think, again, there's this narrative of new normalization with, interest rates and things like that. And I cannot see the interest rate going back to 2020 levels, right? I cannot see it, but I could be completely wrong. I'm fairly sure I am. All right. So just going to check real quick, some comments. All right. Yeah. Let's see. At this point, tariffs are priced in. The market's already going back up tomorrow. So, yeah, good point. I mean, I don't know. Markets are typically forward thinking. Short term, they're, what is it? Short term, they're emotional, volatile, and they're a voting machine, if I heard that correctly. So, yeah, I mean, I don't know about this whole priced in thing because things are still very uncertain, but yeah, maybe. Yeah, it is juicy. Isn't this just a short-term solution? If you're referencing the negotiations, I think, Citizen of the Year, I'm not sure. I read there's a 95% chance of at least one cut by June. Yeah, at the beginning of the year, the idea was that there was going to be a cut by May, right? There was going to be at least one cut in May, but now they're talking about 5 cuts this year, which, you know, could almost be one every 2 months or something like that. I don't see that happening. People are talking about, you know, quarter drops or, you know, 15 basis point drop. I don't know. I just don't see it happening. I could be completely wrong, but don't be surprised if you start seeing this in the news, if you start hearing about this on YouTube, or start reading about this in you know, news articles about the Fed, you know, looking to cut more rates, right? I don't think so. Jerome Powell is really pragmatic. I like the way he approaches everything. I really do admire his steadfastness, and in spite of everything that's going on. I mean, it's not an easy job to be the Federal Reserve Chairman, especially right now when you have a president who's just, you know, going off the rails and doing whatever, you know, whatever he thinks is the right move, right? But that has consequences. So I think Jerome Powell was right when he said that they're going to take a wait and see approach. They're not going to have any knee-jerk reaction. They're not just going to start lowering interest rates just because, you know, of 1 or 2 reports. They're going to wait and see that, you know, they meet their dual mandate, maximum employment, price stability. So if they can achieve that and lower the interest or lower inflation to their 2% goal, then we can start seeing, you know, more and more rate cuts. But I don't think it's going to be a knee-jerk reaction of 5 rate cuts this year. I just don't see that happening. Yeah. Oh, trying to get lower interest rate on debt. Yes. Yeah. I don't like, I know that's the prevailing thought, you know, is basically to force the Fed to lower interest rates for the debt to be refinanced. But I don't know how long, you know, the debt would mature, like what the maturities would look like for the United States. But I do know, and I, you know, it's funny people forget this, but the, what is it? Moody's and the S&P and Finch, I think one of the, like 2 out of 3 of them, out of those companies, they actually downgraded the credit rating for the United States, right? Because of the excessive debt and the risks that we were facing. So for them to downgrade the United States, again, that has no real weighting. It's just their, you know, they're based on their research and what they think. But again, it could have been a telltale sign of something worse to come. So for this to start happening right now kind of just makes sense, in my opinion, of course. All right, so let's go over the markets and then we'll open it up with a portfolio update and then close out the stream. But before I do, let's take a look at the poll. All right, so the poll question was, did you buy anything during the 3-day market sell-off? All right, 70% of you said yes, 10% of you said no, and then 20% of you said you're holding cash. All right, so I made a purchase, a rather large purchase. I did make, which I will show you here in just a moment. But I'm going to go over kind of a story with that one because I woke up pissed off about it today. So I'll cover that in a moment. But, you know, that is good that people were able to take advantage of the dip. They were able to buy some of their favorite ETFs, some of their favorite stocks during this time. I've seen a lot of YouTube videos, a lot of comments, a lot of Facebook posts, a lot of social media posts. People are just fearful, right? People don't want to touch it because it can go lower. There's people in just all over the place, just scared to buy stocks right now. And it's funny, like whenever the stock market goes on sale, this is when people run out the door. They don't want to buy anything. But then, you know, when we start reaching all these new all-time highs and we're on the recovery, people are always like, man, I wish I bought more. Or they say things like, well, next time, you know, there's more fear in the market, then I'll buy, you know, I'll be greedy. Right now is the time to be greedy, right? If you're leveraged like I am, if you have a lot of margin like I do, I could see the fear, right? I definitely went through a little bit of fear myself, you know, but again, a lot of that stuff like remains true. You know, I know people knock Warren Buffett for being this old timey investor, but a lot of what he does works, you know, dollar cost averaging, buying the dip, you know, freaking staying invested, don't sell, all these kinds of things, all these, you know, platitudes that are out there in finance land, you know, they're out there for a reason. When there's blood in the streets, buy, even if it's your own, all right? Let's see. So Senpai says, I would have maxed my margin if it wasn't already maxed. That's what I'm talking about. All right, so real quick, let's go through the markets. So S&P down 23 basis points. Again, we had that whipsaw at the very top. I was ecstatic. I was like, holy crap, we're on a recovery. And then, you know, it started dropping, right? And that's when I got kind of scared. I was like, man, we're about to go for lower lows. This sucks. Then you found out that it was a rumor. And then it's just kind of been teetering and tottering the entire day. And then we ended just 23 basis points. You know what? I will take that. I will take that over a negative 4% drop. All right. Because whenever there's a negative 4% drop, the rest of the portfolio is getting absolutely slaughtered. So I was happy with this. I'll take this, you know, every day of the week. All right. Well, at least over the last 3 or 4 days. NASDAQ 100 actually ended in the green. Thankfully. All right. So ended in the green, 19 basis points again, had that whipsaw motion, moving in tandem with the S&P 500. The Bitcoin. All right. Got to look at the 5-day. There was, you know, a massive drop, right? Huge drop over the weekend. And then, you know, here we are today. So it looks like it's recovering. It did reach about, I think, a low of 77. Oh my God, 74. Okay, I'm late to the game here. It did reach a low of $74,000. So if there's any people out there who are shorting Bitcoin, congratulations. I hope you guys made a lot of profit on that. I know there are definitely some people out there who believe in the whole crypto winner case and the Bitcoin winner case. So, you know, I hope you guys were able to take advantage of that massive dip. If you're a long-term Bitcoin holder and long-term, you know, a buyer of Bitcoin, then I hope you were able to capture some of these lows. All right, moving on to gold. Actually, we saw an outflow of gold, which I thought was really surprising. So gold has actually been dropping the last couple of days. As we can see here, I don't know what the cause of this is. I tried to read about it. You know, I saw like one article just briefly kind of talk about how no asset class is safe from these tariffs. So yeah, it is what it is. I just thought it was really fascinating to see gold actually take a large dip. And I think that was because of the whole rumor thing, to be honest. A lot of investors probably thought like, holy crap, this is a great time to get in the market. They probably sold off some gold and they got into the market, but then found out it was a lie. So I don't know, but I just thought that was rather fascinating because gold has been on an absolute tear this whole year. It's one of the safest asset classes to be in. 10-year treasury, again, we use this as a barometer for mortgage rates, you know, because usually they influence mortgage rates and, you know, this has a big impact on real estate. And what do you know? We have breaking news. China says it will fight to the end after Trump threatens a 50% tariff. Oh my God. Oh, okay. It looks like it disappeared. I got to go back and look at that. Man, I hope that's not the case. I really do. Anyways, the 10-year treasury, we're at 4.17%. We were sitting at a low of 3.9% not too long ago. Looks like it spiked up. No idea why. So sucks to suck. VNQ, again, no asset class is safe. VNQ is a real estate index for REITs. It's from Vanguard. It's pretty much similar to like an S&P 500 index fund. But this got slaughtered over the last couple of days. So my portfolio of REITs have been devastated. But it's nothing new, to be perfectly honest, only because, you know, I've been investing in REITs for a very long time and they've been in a bear market for years, it seems like at this point. I still think there is a strong chance of rebound. But if we head into a recession, if we really legitimately head into a recession, this will not be good for real estate, period. All right. Some sectors will probably perform a little better than others, but everything will definitely be down. All right. Everything, in my opinion, will definitely be down. One of the things that we do have going for real estate is the costs of goods and material have skyrocketed. So, you know, nobody's building anything new, right? No one's building anything, no new apartments, no new homes, you know, people can't afford it. So that is good for current existing inventory. Things like multifamily apartments, things like single family homes, and even manufactured housing or mobile home parks are doing really, really well. Mobile home parks are actually a recession resistant asset class. It's one of the best asset classes in real estate whenever there's a recession. Same thing with storage, because people are downsizing. People are, you know, they don't want to throw away their junk and their crap, so they put it in storage, right? This was kind of a trend that was noticed in during the GFC of 2008, 2009. And same thing again in 2020. So, yeah, it is what it is. So I do hold a pretty large holding, Prologis, PLD, ticker PLD. This is a logistics REIT, a real estate investment trust. This just got downgraded again by Scotiabank. So I just want to provide some quick thoughts on this. But in our view, the current valuation is warranted. I I forget what all this is. Yeah, PFF, I forget what the damn acronym is. Roughly in line with the U.S. REITs as PLD enters a period of slow earnings growth, said analyst Nicholas Ulico in a note to clients. We forecast slowing U.S. net absorption for the sector and expect no occupancy recovery. So no occupancy recovery is a big deal. That's terrible in real estate, because you want high occupancy, right? You want renters renting your space or renting your apartment or renting your home. All right, for the market in the second half of 2025, it now pushed to the second half of 2026 at the earliest. Although industrial REITs have already underperformed since Trump's tariff announcement, we see little potential for positive catalysts this year and see street estimates for 2026, 2027 as broadly too high. So I just want to offer some quick thoughts on this. Because like I said, I do own a pretty sizable portion of PLD. It is one of the larger cap REITs in the sector, and they just had a horrible market decline, right? This is going to be one REIT, industrial is going to be one of the REITs that are going to be more sensitive to the whole tariff thing, because if people are not importing crap or people don't need stuff, like Amazon, they use Prologis, like industrial warehouses and things like that. All these other companies, they use industrial warehouses to store stuff, goods and products, to ship out, basically for, like logistics, right? If people are not buying stuff or importing stuff, this is a huge headwind for Prologis. All right, but Prologis is a very good REIT, in my opinion. They have an excellent management team. They've been able to weather storms before. So I don't think that they will do bad in the long term, but slowing growth is definitely a headwind for these next probably year and a half, right? Until we get more clarity on this whole tariff situation. But they've been hit pretty hard. There's another REIT out there, Rexer, ticker or Rexford Industrial REIT, ticker REXR. Primarily based on the West Coast, and that's where a lot of shipping comes in, right? And with this whole tariff stuff, a lot of the ports out there are predicting 25 to 50% less traffic, if these tariffs are fully implemented. So that obviously is going to impact REITs like Prologis, REITs like Rexar. So just wanted to put that out there. I know a lot of you guys don't really invest in REITs or real estate, but still wanted to put it out there because it is one of my major holdings. So what is this? Oh yeah, I'll get to that in a second. So let's go over a portfolio update and then we will close out the stream, guys. All right, so here is the first one. Okay, you guys will notice that I made a purchase here. This was the purchase I made. I bought the Direction Daily Semiconductor Bull ETF, and this came with a story, and I kicked myself every single minute thinking about it. Even though I know in the long term it's not a big deal, but I still hate myself for the emotional roller coaster I went on. So when the market opened, totally missed the opportunity to buy, right? Buy it in pre-market when it was like $6 and a couple cents, right? If we look here, hopefully this graph will show it. Well, it'll show it down here. But anyways, it was like, what is this going on? Okay, maybe that, excuse me guys, sorry. All right, so here we go. So $6.89, right? Could have purchased this, totally forgot about it, just didn't think about it. And then the market opened, I bought it at $8.30 and it spiked all the way up to $9.47, right? I bought about 1,200 shares, and I made like I was gonna make $2,600 in gains, right? But I was like, oh no, I'm gonna let the greed take over. I want to make more money. I'm gonna hold this for the long term, just hold it. But in the back of my mind, I was like, no, this thing is gonna go back down, right? Especially since there's still so much uncertainty. Just take the chips off the table and just buy in later. I didn't. I left it there, took the screenshot, right? Like, oh, I'm making so much money, and then it dropped down. And I had a stop loss on this for $8.20. Okay. It never dropped down to $8.20. I sold it. I forget where I sold it, but I sold it. And then, it started climbing back up, and then I jumped back in like an idiot. So, lesson learned. I'm not a trader, not by any means or any sort, or any part of me is not a trader, options trader, day trader, swing trader, any of that stuff, but there was a lesson learned here. And that lesson is, be very mindful of your emotions, because I had two parts of it. I had both extremes of my emotions go off. One is, again, I'm highly leveraged. This thing could go even worse, down to like $4, right? Or even $3. It could head south even more because it's a 3x levered product, right? So that scared the living hell out of me, and that's why I sold out of it, right? Whereas on the greed side, I was like, no, this thing can run a lot more. I just have to hold it, right? And I had the stop loss set. Like, the stop loss was my safety cushion, and I was up. But of course, again, let the emotions take over, and I lost that gain. So just word of the wise, people, be mindful of your emotions. Right now is a very, very crazy time. And again, this was right when we were talking about the whole 90-day tariff suspension. And then, that turned out to be false. And then the market kind of just been whipsawing back and forth. So just be mindful of your emotions during this time. Emotions do run high. All right. So that was the newest buy I did purchase yesterday, or I bought the dip, right? Margin still doing decently well. Of course, because I used $10,000 to buy Soxal, that obviously dropped my margin buffer quite a bit. This was sitting at 38,000 one day, and then it dropped to like 32,000 right on Monday morning, and that just rattled my nerves, completely rattled my nerves, right? And then I dropped and then I dropped 10,000 in Soxal, right? So now I'm sitting at $21,000, 30% buffer. Again, scary, scary, scary. This can drop. I put a stop loss on Soxal. That's what this little minus sign is. So I did put a stop loss on there because if I end up losing, whatever the gain is, I don't care. I can live with that. I don't want to lose any more money than that. So is what it is. I'm just gonna let it ride and then go from there. All right. So let's move on. Have one other portfolio, and this one's the big one. Gotta log in real quick. Sorry, guys. This thing always times out. Okay. Hope you guys can see that. So the REIT portfolio hammered, right? Was in the green for a while, no longer in the green. I'm down $6,000. VGT technology focused ETF down $42,000. All right. Is what it is. Been there, done that, got that t-shirt, lived through a recession, lived through a freaking market sell-off, lived through a correction. So this is what it is, right? Again, I just want to show you the holding that I do have for PLD, because again, it is one of my larger positions. It was sitting at about $18,000. I do have a pretty decent cost basis on it. So just going to continue holding, keep using the dividends, and then, just wait for this thing to recover. This will be a long, long time. Torino's another one, and Americold is more of a cold storage REIT, so like if you are buying frozen food, it's probably coming from, well, this is more so on the West Coast, but if you're buying frozen food, it's probably coming from some type of industrial REIT that focuses on cold storage, or some type of real estate that focuses on cold storage. So yeah, this portfolio, not a whole lot changing here. Same business as usual, just letting this ride. I was thinking about putting Soxal in here, but I didn't want to deal with, moving $10,000 into this portfolio and then yada, yada, yada. So I was just like, I'll just buy it on Robinhood and let it ride. If Soxal reaches back to $60 a share, that would be about $66,000 in the portfolio, right? At that point, of course, I'm going to sell. I mean, that's almost a year's salary right there. But, we'll see. I don't expect to hold that, for decades, but I do want to at least take profit at some point in the future. I'm using, let's see, Senpai asked, how much margin you use on your M1? 170. So I am margined really, really high on this one as well. Some of the money is used for actual real estate, for real estate projects and real estate investment. And then the rest was moved over to Robinhood. And then I re-margined that on Robinhood. And I know that's going to freak out a lot of people. A lot of people are going to be like, holy shit, like that is wild. Like, why would you do that? Yeah, that is exactly it. So if this portfolio explodes, you guys will be the first to see it. But, there was a rhyme and a reason for it. There was an idea, a framework I followed, and I'm very, I'm pretty calm with that framework. Like, I'm not worried too much, because again, the S&P 500, the total market, would have to fall dramatically. This portfolio, I'm not worried about getting margin called on. I'm not at all. You know, again, I've been through something with a decline where I just moved a shitload of money into a portfolio and then saw a huge market decline. So I'm not that scared or worried about margin called on this. I'm a little more worried on the whole Robinhood stuff, to be perfectly blunt. You know, I'm more worried about this stuff. You know, if I have to sell out of Soxel to just recoup some of the money and then increase my margin buffer, then I'll do just that. Ondas Holdings, it's only $1,000. There's nothing really in there. PLTW, NVW, again, these are probably the more riskier plays. Although PLTW, Palantir has been doing really well, despite, you know, everything going on in the market. And then of course I have the NVIDIA, which, you know, is totally out of favor right now. Most semiconductors are, most GPU makers are, but you know, I plan to hold this for long term. Will I profit rip or, you know, take some type of chips off the table in the future? I have no idea, to be honest. At first I wanted to swing this until a certain dollar amount. But now I'm kind of thinking I might just hold this, because this is like the next best thing to, in my opinion, this is the next best thing to a cover call ETF, which, you know, I'm not really too much of a fan about. Like I didn't go with NVIDIA from yieldmax because the gains are completely capped, right? But you would face the entire downside. So I don't like that. I like the idea of, you know, uncapped gains, 1-2x levered product like weekly pay from Roundhill. I like that idea with being able to make some type of dividend income, right? Distribution income, whatever you want to call it. So, you know, it's like owning NVIDIA with an income component. So I like that idea. I'm still very bullish on Palantir and NVIDIA, so I'm not too worried about them. XPay and XDT. XPay, I'm starting to get a little iffy about, just because, you know, thinking long-term over 5 years, you're going to get a full return of capital on, you know, paid back, and then you're going to start getting taxed on your capital gain, right? So, or you're taxed on your dividend. So I don't know. There's some thinking there for XDT. I really like this product. I really like XDTE. It is probably my favorite cover call ETF, and I hate to use that word because, you know, you shouldn't have a favorite, especially when you're investing. You should invest in what makes sense. I really like XDTE. The 0 DTE, you know, options that it does is, I'm not going to say it's good for market downturn, but it's going to perform better, I think, than other cover call ETFs, right? And, you know, everyone's starting to copy XDT. There's all these other clones that are coming out. So there's obviously some merit to this strategy. So I know I went on a tangent there, but I hope that answered your question as best as I can. So the good thing about XDTE and XPay, and I know it doesn't show it right here, but I think XPay updates later, whereas XDT will follow the actual market. I mean, let's check it right now. But I think this trades after hours. But this actually follows the S&P 500 like SPY. It will follow it very closely, which I like. Now, this is not going to increase to like $55, $60, $70, $80 when it does recover. It'll probably get capped at about $50 to $52, maybe $53, right? If history is any indicator. So it'll get capped there, which is perfectly fine. I don't need this to grow in value. I need it to pay out money. That is the whole reason why I invested in XPay and XDT. I don't need them to grow. I just need them to pay me money, right? The NVW, the PLTWs, those are the growers. Those are the ones that, you know, I want to grow in value and make some type of distribution income, right? That's uncapped. That's not a freaking cover call ETF, you know, from some type of fund manager that maxes your yield. You know, I'm not into that stuff. So that's why I went with Roundhill. It was totally by accident that all my holdings just happened to be from Roundhill, totally by accident. But I was looking for a product that was similar to NVW, but I couldn't find it. The only other competitor out there was NVDY from yieldmax, and I just don't like being capped on the upside. You know, I want to be able to capture that upside. And I know NVIDIA is going to recover. It's going to enter, you know, a new bull market, or the market's going to enter a new bull market at some point in the future. And I want to be able to capture those gains, right? And not only that, but I'm a strong believer in NVIDIA. You know, it is one of the major market players, right? And this whole thesis on AI, this whole thesis on over the next decade, there, there's going to be exponential growth in artificial intelligence, in the infrastructure of artificial intelligence, and in, the hardware and everything else that goes into, training these AI models. And I think NVIDIA is just so ahead of the curve. Could they be derailed by someone like Cerberus, who also, is their kind of competitor? Probably. Left to be seen. I did see that Cerberus is coming out with the IPO. So they might be a worthwhile, competitor versus like AMD, which I don't think can hold a torch to NVIDIA. But again, I could be completely wrong in a year, and AMD can just beat out the other two competitors. And, maybe there will be a new Magnificent Seven by that time, right? Left to be seen. Yeah, see, I can't write my own options. I just never learned. I keep trying to kick myself and learn, but I don't know. Like maybe I'll do options on Soxel since I have like 1,100 shares. So maybe that's something I'll try to play with or something. And I use that word loosely. Like, you shouldn't play with money, but yeah, especially when you're margin to the tits, but we'll see. But all right, guys, I hope you guys enjoyed the stream. Hope you got a lot of value from this. I really, really enjoyed today's episode, especially since we had such a chaotic last couple of days, and I missed Friday's stream because I woke up so late because I was freaking trying to keep up with the markets and everything that was going on. It was a bloody hellish day. So, I'm glad we all made it. Hope you guys were able to buy the dip and get something on sale, or at least your favorite, ETF stocks, that type of stuff on sale. But that'll do it for me. I'm going to go ahead and get ready for the gym and start my day. I hope you guys have a great night wherever you're at in the world, or a great rest of your evening, or a great morning wherever you are. And with that, you guys take care, and I will see you in the next stream. Take care.